Hey, good morning, good afternoon, good evening, everybody. Welcome back to my channel. So if you are new, this is a wealth building channel, and we have at least one day a week where we talk about different investment stuff. So we are talking about healthy profit margins today. That's our subject. I did not change the title up here because it's pretty much the same part of the plan. So anyway, if you are coming back, thank you. I will be going off the screen so you can see some of the figures you need to probably have a notepad if you are new here to my channel, because I'm usually going to give you information that you need to take notes. But if you are driving, please don't take out your notepad. Continue to drive and come back and watch when you can. All right, so we're going to talk about our subject today, and we are talking about how to flourish in tough times, which is June of 2022. We all recovered and survived the COVID, pandemic. Now we're going to try and recover from the economy pandemic. And that noise is really getting on my nerves, and I can't figure out how to get rid of it. I think every time I get an email, it does that. I'm trying to ignore it. Okay, so today we're going to talk about stocks, of course, right? And in some of my previous videos, this is what we talked about. Short-term accounts, different ways to diversify your portfolio. I'm not going to repeat everything I said on that. We're just going to talk about something new today. We're going to talk about some of the top companies in a variety of industries that have a prospect for rising profit margins. And this is for my investors who like to invest in stocks. Amazon.com, of course. Biotechne, which is Techne. The symbol is TECH. The price is $4.33. Broadcom, of course, which is AVGO symbol, which has nothing to do with Broadcom. It makes no sense to me, but maybe it was owned by somebody with AVGO. Moderna, of course, because of the obvious pandemic. mRNA. Now, Amazon price is $3,089, which is insane. The price earnings ratio is 54, the gross margin 42%. And we also have Visa, of course, which is $217. And the price earnings ratio is 30. Gross margin of 2021 is 97. So these are the companies that have great prospects for rising profit margins. We're going to discuss these a little more in detail, what they're doing right and wrong. And if you have any comments, please leave them in the comments section. If you have any comments on these. So picking good stocks is challenging, but these days investors must be wary of companies that are vulnerable to higher for longer inflation, as well as the supply chain disruption, rising interest rates, the geopolitical situation in Eastern Europe, and some of the companies that hold up better than others in tough times are firms that lead their market or their industry, have typically strong pricing power. And you want to think about Apple and Nike. These types of companies can pass on higher wages and material costs to their customers by raising the prices for their goods or services without seeing much slip in their demand. So the other firms that have good results for controlling costs are, of course, Johnson & Johnson, which has proven adept in the years past. Still, other businesses that are simply less sensitive to rising material and labor costs, or even the supply chain issues, are what Airbnb, Netflix. One of these ways to find these companies is to scrutinize the profit margins. So a company's bottom line, its net income or profit matters, of course, but profit margins can show efficiently a company managing its profits and operations over time, in good and bad periods. So well-managed firms can maintain and expand their profit margins through changing economic and market conditions. Also, these companies have strong balance sheets. They keep a steady stream of free cash flow. So if you have a small business, you have a company that you're looking to grow, then you want to learn from the best. You want to learn their game plan and do the same thing or even better than what they're doing, which is one of the reasons that we talk about these things. There are different ways to measure profit margins, and gross margins show the percentage of revenue that remains after deducting the costs of producing the good or service that a company has sold. And operating margins reflect the percentage of revenue left after the ongoing expenses to run the business. Most of us that have a business already know this. The companies we're going to talk about have the potential for improving their profit margins of one kind or another. In most cases, we're talking about the gross margin here, and we look for the gross catalysts that might propel their profits even higher. And all the numbers and stuff that I'm giving you are not something that I made up. They're from the experts, and these are through April of 2022, so it's like the first quarter of 2022. So if I give you any numbers, any figures that I'm quoting here, they're all from January of 2022 to April of 2022. So the e-commerce business giant Amazon it raised its annual membership. Of course, it's going up again. 17%. I'm one of these members, by the way, and it's kind of annoying, but I do like my free shipping. So it's going from $119 to $139 in 1 year. It's a good bet that most of Prime's current 200 million members and perhaps 200 million more will pony it up, which I'm one of them, and I probably will. The last time Amazon increased its annual fee in 2018 by 20%, the number of subscribers doubled in 3 years. It's pretty amazing, isn't it? Why do people keep coming back to this? We may have another video because it's been a subject of why to cancel this, but for me personally, I don't cancel it because I get a lot of free stuff on the movie channel, Amazon Prime, and I also get a lot of free shipping, and which is one of the reasons that I personally keep it. If you have any comments below on why you keep Amazon Prime, and why you may or may not get rid of it with the $20 hike it's getting ready to come out. This is June of 2022. Prime Day is in I believe it's June or July of 2022. More important, however, it's the shift in Amazon's overall business. It has a higher gross margin. E-commerce is still the main business right now. Online retail is a low-margin trade, and Amazon's growth comes from two other businesses with healthy margins. Advertising sales, Amazon Web Services, AWS, its cloud computing business. It's growing fast, and ad sales on the Amazon website, the Prime Video, the Fire TV. They all topped $31 billion in 2021, a 58% jump from 2020. The firm's new contract stream NFL's Thursday Night Football games also should propel ad sales. I do wish they would create something like YouTube has here, which would be pretty amazing. Maybe us creators can get paid a little more. And AWS revenues, which account for 13% of overall sales, increased from 37% in 2021. Anyway, I can keep going with these numbers. Everything is going up with them. And look past 2022, during which wage inflation and investments in shipping and logistics hamper the gross margin expansion. Amazon shares trade at a whopping 54 times per estimated earnings for the year ahead. It's quite unbelievable. So they pump out an average of 25% annual earnings growth over the next years. So moving on to our next company that we're going to talk about is Biotechne, which is Techne, and the pandemic revitalized the spending on health science research. And that's to the benefit of Biotechne. The company is a leader in the production of proteins, antibodies, compounds used in medical research, drug development, diagnostic test, and this is because of COVID. This is something that's necessary for COVID vaccinations and treatment. So this company here is part of the reason that this company has reinvested its robust operating cash flow to expand production capacity and tuck in the acquisitions, making small cash deals for private companies. It has completed more than a dozen deals since 2014, and most recently in 2021, it acquired Asurgen, Asuragen, a maker of diagnostic and research products, such as oncology testing kits, which are pretty quite popular. If certain milestones are achieved, Andy Adams, a portfolio manager with a mutual fund company, Mares and Power, says the company has been able to improve gross margins in recent years, despite its many acquisitions. So that's another one, the biotech firms that come at the share price is at a price earnings multiple of 48 times a year ahead of estimates. So Broadcom is another one. And it's a semiconductor giant. It's best known for networking switch chips for data centers, and its radio frequency filters for high-end smartphones. So thanks to the well-executed acquisitions, Broadcom is highly diversified across a range of fast-growing tech areas. Put together, if you have a combination of end markets with big growth from cloud computing and factory and data centers, this will drive growth regardless of the economic environment. So the company is extremely profitable and well run. Annual growth margins have climbed steadily in recent years. Analysts expect them to widen 76% over the next 2 fiscal years, and meanwhile, costs have barely budged in recent years. The semiconductor industry has been dealing with supply chain bottlenecks since the start of the pandemic. So Broadcom isn't immune to its size and tight supplier relations because it has helped minimize the impact. The company has a good handle on their supply and demand, and it should be okay till the beginning of the first half of 2023, and it's passing on material costs and increase to its consumers. So analysts expect the earnings to jump an average of 15% a year over the next 3 years. Ahead of earnings, below the typical P/E of 21 for its semiconductor peers. So this is one that you might want to invest in. And like I said before, Broadcom is at $587. So it's kind of pricey, but its gross margin in 2021 is 73.9%, which is pretty amazing. Moderna doesn't fit squarely in the expanding profit margin box. At least historically. The biotech firm, a pioneer in technology, has only just become profitable thanks to COVID-19 vaccination. In 2021, it reported 28.29 earnings per share, a titanic shift from $2 loss per share in the previous year. Gross margins were at 75.1% for 2021, above the 61.3% average for peers. A net profit margin of 66% was well ahead of the average. Shares are down 67% from their high last August, a much bigger decline from the typical biotech stock experience, which makes Moderna a compelling value. The stock suffered as investors worried that the COVID vaccination was less effective against new variants of the virus. But Moderna has plenty of irons in the fire. It's still working on new treatments, including vaccinations for specific variants. It signed a $19 billion agreement for COVID vaccinations for this year. It has $3 billion more in potential orders for 2023, and Moderna has 44 vaccines and therapeutics in development, half of which are in the later stages of trials, including the mRNA-based vaccinations for flu and the Zika and the personalized cancer vaccinations. So what's more, this company is a financial stronghold. It's $17.6 billion in cash, investments, and minimum debt. Analysts expect 2022 earnings to be a tad lower than 2021, and they've seen a growth of 7% per year on average. So the P/E of 59 for biotech stocks. Now the last one we're going to talk about in this video, because this video is getting kind of long and I might have lost half of you. So this would be Visa's payment processing network. It operates like a toll booth, and it's more electronic transactions that Visa handles. The higher the company's revenue, the ongoing shift to digital payments and online shopping. It has a boom. It has a strong growth in transactions, such as crypto, digital currencies, crypto-linked cards. It makes it easier to pay for products and services with digital currency. A sharp recovery in international travel and cross-border money flows. As long as the higher price tags don't crimp consumer spending, stickier inflation is a positive. So David Hall is a certified financial RA, which I don't know what that RA means. If anybody knows, please let us know. If anybody's actually listening to this video and watching it this long, I might start giving away things as soon as I start making money off of this channel. I might start giving away things to my subscribers who actually stay to the end of these videos. So I'll put in something like at the end. I think I might do that in the future, but right now I'm not. But just stay tuned, stay subscribed, and I'll think about it. I'll probably do Amazon gift cards because everybody can use that, right? So Halt pays close attention to Visa's David Halt, which is a financial planner. He pays close attention to Visa's operating expenses and margins. If the firm can control the costs and increase in revenue from higher transaction volumes, the beauty of this business model is its operating leverage. If you are paying attention to what I'm saying, I talked about several businesses in this video, and I tried to show you some stock stuff as we were going along so that you can pick up some things here on the screen, on the video, if you're taking notes or whatever. And all of these things I'm showing you here on this video are things from the first quarter of 2022. So if you're watching this in 2023, this is not going to be relevant. None of these numbers, it's all going to switch. So we talked about some good, some companies to invest in, some companies that have rising profit margins. Most of them we already know. Amazon, of course, Biotechne, Broadcom, Moderna, and Visa. And they're all in different fields. We also talked about Johnson & Johnson, and we talked about Apple and Netflix. All of them are different fields. Not all of them are entertainment, and for different reasons. On some of the strategies and the reasons why, which most of us already know, that stay current on stocks and investments. So this is our investment video for the week. And the next one we're going to talk about, some of the things we got coming up on the future, if you're still with me, is riding on a small cap storm. We're going to talk about Europe and some of the funds in Europe that are taking a hit. And of course we know why, because of the war in Ukraine. So anyway, I thank you all for watching. Please stay tuned and come back again.